Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody, and welcome to the Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, and hope you are all having an absolutely amazing trading day, as it is Friday, May the 3rd. We are ending the week on a little bit of a low note as we're getting some sell-off in the marketplace. Not overly surprising. We had a touch to new all-time highs. And for those of you that have listened to the channel or have been in the live trading rooms at TradersArmy.com, we talk a lot about how sometimes the all-time high is then followed by a little bit of a pullback and a little bit of a resting before then again going higher. So not overly surprised that we're seeing a little bit of a pullback these last few days, and may even see that continue into today. So let's go ahead and dive right in. If you're new to the channel, do me a favor, click the subscribe button down below. If you are not new to the channel, do me a favor, leave a comment, leave a like, throw a thumbs up, whatever it is. Let the computers know that you are alive. All right, let's dive right in. So S&P this morning, we are up about 7 points off of yesterday's low. Now you can see that we had converted this little bit of a rally here into a confirmation entry, and we turned it to a confirmation entry primarily because of the fact that we had touched it. We got a really nice trade off of this touch and go level, and that causes a trade changing to a confirmation style entry. So, we had this on the 60-minute chart. Up above us, we had this on the 15. And on the 15, we actually got a little run off of this movement. And I had actually meant to remove that line. Actually, I did not mean to remove that line. I left it in because this could still act as a supply area up above us, now that I was thinking about it. And so now I'm looking at a potential rollover down through this level. So I'm going to remove this line. This is why we use confirmation style entries, by the way. Price went right through the area, but should not have triggered an entry. If you're following your confirmation style rules, your entry should not have been triggered in that case. Starting to make a little bit of a move up here this morning. It is just about 6 o'clock in the morning Eastern time, U.S. And so we've not really kicked off the early morning trading with any strength. But I would be looking potentially for a 4-hour candle-to-candle short. And the reason I say the 4-hour candle-to-candle short is that this is just setting up for one more leg down, right? We're setting up for one more leg down, and really I think it could be even coming back to that 2900 area. I think that 2900 area right in here on the 4-hour chart could be the next level that we see for a leg down and for price movements to kind of come into this zone. So keep an eye on that area down below. So from a candle-to-candle perspective, those of you that trade the candle-to-candle style, look for shorts coming out of that area. If you don't know what the candle-to-candle style of trading is, I'll put a link to that video in the comment section down below so that you can get a little caught up on that. We did a live trading session on candle-to-candle style about a year ago and got a lot of great feedback from it. Now, that's the S&P. In the NASDAQ, we had a long setup right in here on the 15-minute. Talked with our stop below the pivot. Remember, for those of you that are not used to it, my rule is that when I've got a level close to a pivot, I'll widen out the zone and move the stop to below the pivot. And that's exactly what happened here. Price went through the little level we identified, but did not go below the pivot. And so price then gave us a really nice strong rally up out of that level. In the NASDAQ, if you want to try that short, you can go on the candle-to-candle style as well. Same exact setup, same exact trade on the NASDAQ level. If you don't want to try the short and you're thinking that we've gotten some strength behind us, which there's definitely reason to believe that. There's the 2 a.m. market opened up through here. You could use this as a potential reversal point right here at our European market opens. Now, I would say this, that I feel like my gut tells me that we've got a little bit more of a pullback in us early this morning. So just be cautious of this level when the markets do indeed open. I also don't really like the fact that we're basing up above it. And so it makes it a little bit more hairy. But I want to put it in there for those of you that are taking it. This does not fit my risk parameters or rule criteria, but I put it in there because I think the number of you it might. And so I'd much rather just show it, but give you my thoughts. Crude oil. Now, crude oil, our breakout trade in crude oil finally hit. For those of you that trade crude, we got a really nice breakout, and that breakout level in crude rallied, dropped all the way down to our demand level. The demand level that we hit, this 60.96 to 61.17 level, we got a nice little move out of the zone, about a 2-to-1, maybe even a 3-to-1 move. However, now we're kind of doing a whole lot of nothing. So if you're in this trade, I would take this stop, move it to break even. I'm going to remove our breakout lines. And looking at this, we had this level here and this one up above. I'm going to leave it as is and not really change anything. There's nothing I want to add or take away. Hopefully you grabbed the long or were able to get in on that. If you go to the 15-minute chart, right here at this speed candle, there is some area of opportunity right through here, through these two little levels. So be aware of these two little levels for a potential reversal at some point to see, if we get a little movement out of that, what would it look like? I think you may not make it all the way up to here, and you might have to settle for one of these levels down in here. And if you do, that's about 62.35 to 62.67. I would look at these just because they're kind of in the middle of the move down. I would look at those more as a confirmation style entry. But I do like the time of the day that they were created. And the time of day that they were created early in the morning makes for potentially a good trade setup. What I don't like is that it's in the middle of that move down, which oftentimes acts as just a little bit of a speed bump. Okay? All right, and then gold. So gold, we had a really nice short in gold right here. For those of you that took the gold short, you were very well rewarded on this nice little move down. This gold short, by the way, was found by a subscriber in our live trading room on Friday night. So nice job in our live trading room as one of our members actually pulled that level out. We converted it to a confirmation style entry yesterday, looking for it as a potential for a reversal. Coming back into these, I don't really like the time of day that any of these levels are formed, and so with these levels being formed at a strange time of day, I'm going to leave these things alone and not really add anything to this market at the moment. I think that we may get another pull back down on this market and see if price comes down from this region. Let's take a look real quick at our bonds and currency markets. So our bonds and currency markets here in the ZN, which is our 10-year note, we did get a little bit of a breakdown in the 10-year note, and then price popped back up. Now, typically I like to see basing before the level on a breakout, and even though we touched below, came back up and got the basing, you certainly have a reason for entry on this piece. If you got short on this level, please put your stop. I would put your stop just above this region here. As that would be where we would be looking to come back in if indeed you get a rally up. So your stop would be just above this pivot at the moment. Upon normal entry, you'd have to put your stop way up here, and then probably the 6 candle rule would have triggered. So everyone's going to have a slightly different way of handling that particular setup. For now, what I'm going to do as far as adding reversal levels, taking a look at this area in here, I think does still indeed make sense to add that reversal level right through there. Looking at our Aussie. So in the Aussie, we talked yesterday about a breakdown short below this area. So if you took the breakdown short below this area in the Aussie, then you were very well rewarded as price moved down below this area and has continued its move down. And then in the euro, unfortunately, this level hit and blew through. We actually had a little bit of basing, though, before the level, which technically would invalidate the level. However, this is the area that we talked about yesterday. We left the demand area on the chart, and the demand area, this is a great picture of old demand acting as new supply. As after the strong move down, that old area of demand acted as new supply, and we got a very nice move away. So leave me a comment down below if you're able to actually catch that one. And then the last one I'm going to cover today is the Canadian dollar. The Canadian dollar, I think, is setting up nicely for a breakdown below this area right through here. And this could be a level to look for a potential short. Nice basing in front of this area. We've hit this area a couple of times. Room to roam is something that you might question just a little bit with this area in here, but I think that this does set up for a breakdown from this region. So that is all that I have for today's levels. As if you're holding one of these futures positions over the weekend, remember to use your options on futures as a way to hedge any of your gap risk over the weekend. But I hope you guys have an absolutely amazing Friday, and I will talk to you all soon. Later.